Was cutting rates by 25 basis points, which is more accurate than saying 0.25%. That essentially means that the repo rate, which is the benchmark rate, which the Reserve Bank lends to commercial banks, has now fallen. It was 6.75%. It's now down to 6.5%. And this is a relief for many in South Africa who are holding on to too much debt.
Much needed relief for hard-pressed consumers and businesses. The cut was driven by inflation being under control. Oil prices have been constrained and food inflation remained low. The rand has been resilient, and hints of possible rate cuts by the US Federal Reserve and the European Central Bank have also provided the Reserve Bank sufficient room to ease monetary policy. But the economy is expected to continue with its pedestrian growth.
The SAB now expects growth for 2019 to average 0.6%. The forecast for 2020 and 2021 is unchanged at 1.8% and 2% respectively. The MPC assesses the risks to the growth forecast to be balanced in the near term, but remains concerned about longer-term risks.
The Reserve Bank says monetary policy alone is not the solution to long-term economic growth challenges. It says structural reforms are needed to complement it. A cut in interest rate will, however, provide short-term relief for the strained economy.
Policy uncertainty has been there for the last while. There have been concerns about various policy settings, and this has had an impact on business confidence, investment and employment outcomes. So the way that this comes through is that you start to see household consumptions declining, and you start to see firms delaying their investment decisions. So to some extent, for our 25 basis points to have a significant impact, this must be complemented by other structural reforms.
This will help add a few rands back to consumers' pockets.
Makes it a lot easier to service your debt. I would, however, say if you are heavily indebted, maybe keep your repayment the same and try and, bring down as much of the capital you still owe on your debt as rapidly as you possibly can.
Analysts are optimistic that another rate cut could be on the horizon.
Over the next year, the market is pricing in another 0.25 or even 2.25 interest rate cuts. But as the Reserve Bank governor keeps on alluding to, it's all data dependent at the time that they are making, their decisions. So it depends on inflation at that point in time and the inflation outlook.
The low economic growth rate remains a thorn for government finances as it impacts negatively on its revenue collection efforts. SABC News, Johannesburg.